Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimezie Obi Iwago. On the program today, Nigeria's Manufacturing Purchasing Managers Index falls sharply in November to 60.1 from 64.8 in October. Stenoff Africa Retail's full-year operating profit jumps 25%. Plus, Zambia to start refinancing Eurobonds in 2019. Let's get started now from here in Nigeria as the Manufacturing Purchasing Managers Index falls sharply in November to 60.1 from 64.8 in October. The monthly PMI report released by FBN Quest today shows all 5 sub-indices fell last month, with employment recording the lowest dip at 53.5 reading. FBN Quest calls this a reality check, as the headline reading has been above 50 since March. The analysts say the principal driver has been the CBN's use of multiple currency practices, which has transformed FX liquidity. But FBN Quest still sees some challenges as some manufacturers face the task of the increased cost of imported inputs and higher energy costs. FBN Quest assumes the headline reading will remain well above 50 in December, but do not underestimate the impact of the recent recession on consumer pockets. And to the markets now. The Nigerian stock market, which closed on Friday for the Muslim holiday, opened the new trading week and month on a positive note, up 0.07% at intraday. The Johannesburg Stock Index was also in the green at 0.13%. However, the market in Egypt was trading low at 0.48% at intraday. And Kenya closed positive on Friday, up 0.09%. In the Middle East, the Qatar stock market rose sharply at intraday because of hopes that Doha can resolve its diplomatic dispute with 4 other Arab countries. Qatar's foreign minister said late on Sunday that Qatari Emir Sheikh Tamim bin Hamad Al Thani was expected to attend the annual summit of Gulf Arab heads of state in Kuwait on Tuesday and Wednesday. Qatar's stock index was up 2.24%, although trading volume was moderate. Drilling rig provider Gulf International Services jumped 9.1%. United Arab Emirates markets reopening after a long weekend also climbed. Dubai added 0.32% as blue chip Emma Properties, which has been pulled down in recent months by the slump in Dubai's real estate market, rebounded 3.1% and was the biggest gainer. Abu Dhabi was up 1.02%. Saudi Arabia, which had risen for 8 straight days and broke above its 200-day average on Sunday, was up 0.16%. And in Europe, markets were higher in early trade as investors digested news the U.S. Senate narrowly passed a major tax bill over the weekend. For more on the market, I'm being joined by my colleague in Frankfurt, Conrad Busen. Good afternoon, Conrad. Good to see you. A beautiful week.
Hello, Timmy. I hope you are fine, and I hope everyone in Nigeria is happy watching us.
Sure, we're all doing great. Now, U.S. Senate Republicans narrowly passed a bill on Saturday to overhaul the country's tax system. What's on the mind of the Europeans regarding this landmark development?
Well, Jimmy, you can find a lot of happy faces here on the equity trading floors when you talk to traders about the topic and look at the German DAX, the stock index here. It looks like a sideways movement. Actually, the market jumped up 1.5% this morning immediately after trading started. So the positive effect is there. Of course, many German businesses would profit too if the corporate taxes in the US were lowered, not only because many of the German companies also pay taxes in the United States when they have business there, but also, of course, because of the potential demand from the United States for German goods after those corporate tax cuts really triggered the expected economic positive boost effect. That's why Trump and his administration and the Republicans are doing it. They want to give the economy a boost, and of course that's why it's driving markets upwards. As always, I have to say, on the other side, there are a few concerns and worries if you talk to maybe not the traders, but economists and pundits here. When it comes to this tax reform, it's likely that it's going to increase the budget deficit of the United States by at least $1 trillion over the next 10 years. That's a lot of money, a lot of more debt for the Americans, which already are sitting on large amounts of debt. And of course, the way how this, the partisan way how this tax reform and this tax legislation was passed in the US and how it was negotiated is not really something that makes people here happy when they take Washington as a reference point for good policies. And also, of course, there's one social factor, if you like. The lower taxes are likely to widen the gap between the rich and the poor in the United States, which is already really wide. So there are potentially negative effects on the society there and on policies and politics in the US, and that's something that makes a few people here at least worry.
Well, aside from that worry, for some people, it's also good news for them, particularly the Germans there, who might perhaps have something to benefit from that tax reform. Well, let's look at the UK. The Prime Minister is today having the most expensive Davos lunch in the world as she goes to the table with European Commission Chief Juncker. Now, will this lunch be a bon appetit across the table?
Probably not, Chimmy. This long and very, very tedious negotiation of phase one of the Brexit talks has shown how difficult everything is and how difficult the negotiations between the UK on the one side and the European Union on the other side is likely to go. And, many market people really would like us to get to phase two very, very quickly. Phase two of the Brexit negotiations will be about the future trade relations. This will be about, for example, the state of the London-based banks and their passport rights, which allow access to the European continent in the future, or maybe will not allow this access because it's not negotiated yet. And the Brexit date is set to be the 29th of March 2019. Sounds like far away, but it's not really far away because thousands and thousands of details have to be negotiated, things that at the moment business in neither the UK nor Europe have to worry about, but they will have to worry about after Brexit happens, especially the UK businesses, because it's more important for them that they have good access to the market in Europe than it is for Europe to have good access to the UK.
Right. Well, we'll continue to keep a tab on that Brexit talk and see what comes out of it eventually. Now, strategies at UBS has ranked Switzerland as Europe's #1 market for investors. How is Frankfurt beaten down on this, Conrad?
You can see me laugh, Jimmy. This ranking comes from UBS, which is a Swiss bank, and so there might have been a little bit of self-interest involved there, interest of the bank in Switzerland to attract investors to Switzerland. But honestly, of course, Switzerland is a #1 for investors. It has been for quite a long time. The economy there is doing well. Businesses are very, very competitive. And the administration and politics have shown that, this very special way in Switzerland of consensus seeking and of asking the base when it comes to details. The base meaning that, the Swiss have polls and the Swiss people are often demanded by the government in many detailed questions. They have a say. They contribute to what's going on in Switzerland. And that's seen as really something to create a lot of stability, something that investors like. And at the same time, the economy is doing well. Businesses are strong. What might be not so easy to evaluate from the outside is how the Swiss are feeling. House prices there have soared much more than, for example, here in Germany during the recent years. Prices are very high, so that many people who live in Switzerland on the German border or on the French border go shopping, grocery shopping in Germany and France because prices for them are much, much lower there. And they, of course, wouldn't do this if they didn't need to, if they didn't see the advantage and a very big benefit in terms of money in the pocket that they have from this. Life for the Swiss is beautiful because of the beautiful mountains, but it's not always easy. Of course, for investors, it is a #1 destination.
I know that. Well, thank you very much, Conrad, for your time. The week has just started, and I guess we have quite a lot to chew in the course of the week. Enjoy the rest of the day.